earlier this morning in the pre-market, Sofi reported terrific third quarter financial results, and congrats to all the Sofi bulls and shareholders out there. They beat on both the top line and the bottom line, including a raise in guidance for the third consecutive quarter. Now, there's a whole ton of interesting details both in the report and on the earnings call themselves, which we're going to cover in this video. Probably a bigger video, so let's jump right into it. Now, as I mentioned, this is going to be a full breakdown of the earnings report and the business where it stands today. And as a result of this, I've added some time markers so that you can skip forward and check out the parts that you're most interested in. But before we get started, these videos do take a lot of time to make. And so if you do enjoy them, please share them out to other Sofi investors or prospective Sofi investors. And if you are new to this channel, I make videos around Sofi. I cover the news, analysis, commentary. If you are a Sofi fan or a Sofi investor, make sure to subscribe to the channel for more content around that company. And now let's jump into the actual report itself. Sofi reported $419 million in third quarter revenue, beating analyst expectations of $390 million. They also beat the earnings per share expectations, coming in at -9 cents versus -10 cents EPS expected by analysts. First, let's start off with super high level metrics, and then we can jump off to their individual business segments specifically. From a members perspective, Sofi added 424,000 members for Q3, bringing the total members to 4.7 million, representing a 61% year-over-year increase. Now, I made a video in Q3 with my own earnings predictions for the business, and in that video, I expected a little bit more bullish results, 4.8 million members versus the 4.7 that they reported, up 506 versus 424,000 members for the quarter, or 64% versus the 61% year-over-year growth that Sofi reported. And if we look at these numbers, we can see that the growth rates for members is somewhat declining from 86 to 69 to 68 to 61. And a similar story here for products. The company added 635,000 new products in Q3, bringing the total products to 7.2 million. In my earnings estimates, I expected a 73% growth rate to come up to 7.4 million total products, rather than the 68% increase that Sofi actually reported. And similar to members, the theme that we've been seeing in products as well is this declining sequential growth rate from 104 to 84 to 79 to 68 in terms of a deceleration in Sofi's growth. However, one positive trend that remains is that products is growing much faster than members is. So 68% versus 61% growth in members. And if you're new to the channel, this is absolutely a positive because it further accelerates that flywheel opportunity for Sofi. If products is growing faster than members is growing, they have an entire value proposition over that cross-selling. Now, the only number that was actually higher than my estimates was the 1.28 million total lending products, which actually increased more than what I expected it to increase, 6.5% or 24% year over year. We're going to come back to just this number. Total FinServe as well was just under my expectations. I said 89.5 and they actually increased 82.8 year over year to 5.9 million members. And once we go into the specific segments for lending and financial services, we're going to revisit those numbers again. But keeping at a high level right now, just looking at Sofi's flywheel, we can continue to see a further acceleration in terms of the ratio between financial services products and lending products. If you'll remember, in a previous video, I mentioned that back in 2019, it was 80-20 in terms of lending to financial services. That's completely flipped. It's more 80-20 now, financial services to lending products. And this is particularly interesting when we look at the breakdown of the overall product growth by cohort. Lending was the only segment that had an accelerating growth trend, 24% year over year. Again, this was the only segment that actually beat my expectations. The lending segment has been accelerating since Q1 of 2021, growing faster and faster. Financial services, by contrast, grew 83% year over year, and that growth rate is coming down over time as we see. Now, this wide discrepancy is to be expected because lending is a really much more mature product. And so if you're asking yourself, wait a minute, why is lending only growing in 20% range, whereas financial services is growing maybe 80 or 90% range? It's because lending is their bread and butter. It's their mature product line, whereas financial services is much newer. And as a result, accelerating much faster. Finally, at a high level, looking at their technology platform, Galileo and Technisys, this segment grew 40% year over year to 124 million accounts for Q3. And if we put all of these numbers together from a financial perspective, this 419 million in total revenue represents a 51% increase overall in revenue year over year. This is a record revenue number from a business perspective, and it also represents the 6th consecutive quarter of record adjusted net revenue for Sofi. Adjusted EBITDA came in at 44 million, which was also a huge record, 332% increase year over year, 118% quarter over quarter. This is the second straight quarter where EBITDA doubled. In Q1 of 2021, Sofi reported 8.6 million in EBITDA. In Q2, that number jumped from 8.6 to 20.3 million, and in Q3, it jumped again to 44.3 million in adjusted EBITDA, which now brings their trailing 12-month EBITDA to almost 78 million. In other words, Sofi is inching closer and closer and closer to that profitability. More money is falling towards the bottom line, and we're going to talk about this a little bit more in depth as we get closer toward the end of this video. However, despite all of this, Sofi recorded a GAAP net loss of 74 million for Q3 2022. So that's the high level pitch. Now let's dive into the individual business segments that contribute to these large numbers. First, let's start off with lending. Lending products grew 24% year over year, and this results in the 6th straight quarter of accelerating year-over-year growth. The growth was primarily driven by personal loans, up 35% year-over-year. This is followed by home loans, up 21% year-over-year, and finally student loans, up 9% year-over-year. This is all from a product perspective. Now, just to put those three products into perspective, of the 1.28 million total lending products, personal loans is 61% of that offering. Home loans, by contrast, is only 2% of total lending products. It's a very, very small segment. However, this is an important distinction to make. Remember, personal loans are among the most profitable loans that Sofi can make, followed by student loans, which we know are going to have an uptrend in 2023 again as a result of the moratorium news that came in recently in the past months. In terms of new originations, Sofi saw a record personal loan segment origination, over $2.8 billion as of Q3, up nearly $1.2 billion or 71% year over year, and up 14% quarter over quarter. So from an originations perspective, personal loans was the only segment that actually increased. Home loans was down 73% year over year in originations, and student loans was down 53% year over year in originations. The business did mention that the moratorium weighed heavily on student loans. They also mentioned that part of the reason for the rise in the personal loan origination was due to the technology platform of testing risk controls for the approval process and the underwriting models to maintain the highest credit quality. Remember, the average FICO score for a Sofi loan is in the mid 700 range. They're targeting the safest individuals from a credit perspective. And we're going to jump into the technology platform in just a second, but before we do that, I want to visit the operations side of the lending segment. So in other words, how do the originations and the total products for lending segment contribute to the actual dollars for that segment? For Q3, the lending segment reported 297 million in adjusted net revenue. This number was up 38% year over year. And the business is attributing these higher results to higher loan balances and a net interest margin expansion, as well as record personal loans origination and strong sales execution. Sofi's lending segment is a profitable business segment, and it contributed to $180 million in profit for Q3 2022, up 53% from 117 million in Q3 of 2021. And if we just dive one layer deeper, we can see that the total net revenue for lending increased 43% year over year, whereas the expenses for that segment only increased 19% over that same period, and this all represented in a 53% increase in the contribution profit. So to recap, I really love the lending segment for Q3. Of course, everybody acknowledges that personal loans is really carrying the burden here. This has been the case for several quarters now. It goes along with the interest rate increases. However, moving forward into 2023, we expect student loans is going to make a huge comeback for the business. However, lending remains Sofi's biggest profitable segment. It also remains one of their steadily growing segments, accelerating growth rates for the business, driven primarily by the personal loans. And before we wrap up the lending segment, one question you might be asking yourselves is, why are personal loans really strong this year? I mean, personal loans have been carrying home loans and student loans together. And to answer this question, Anthony Noto, I think, did it best in an interview he gave earlier today on their Q3 earnings, where he basically mentioned that the strength in personal loans is a direct result of the interest rate environment.
Anthony, your company is growing strong, and I want to know if there's anything in your earnings results that would indicate trends, maybe that reflect what's going on in the larger economy, something that might surprise us, or just kind of confirm what's going on, the big picture here.
Well, the higher interest rates as a result of the Federal Reserve raising them to try to offset inflation and cool down the economy is driving a refinancing boom for personal loans. People are refinancing out of revolving rate debt into fixed rate term debt. And so that business is definitely benefiting from that trend.
And now that we've covered the lending segment a little bit, let's move on to SoFi's technology platform, consisting of Galileo and Technisys. This segment grew 40% from 88 million accounts in Q3 of 2021 to 124 million accounts in Q3 of 2022. And this was a contribution mix of new clients as well as growth in existing clients. Technology platform is also a profitable business segment for SoFi. They reported net revenue of 85 million in Q3, up 69% year over year. This result includes Galileo revenues, which was up 29% year over year, and expenses for this segment increased 89% year over year. Management has continually reinforced their stance on the technology platform that they will have a continued effort to invest heavily in this technology platform to capture and significantly accelerate the growth opportunities across different product verticals, across different geographies. In the report, they also highlighted that they continue to anticipate this business operating between 20 to 30% contribution margins for the foreseeable future as a result of this reinvestment. Despite this 89% increase in expenses, the contribution profit for the technology platform increased 24% year over year to 19.5 million. And really, from a contribution margin perspective, what's dragging the business down is Technisys, their most recent addition to the technology platform. The report highlighted that without Technisys, the contribution margin would have been closer to 30%. However, I don't think we should be too concerned about the technology platform in general because of the ROI that this platform provides in the long term. I've mentioned previously multiple times that the long-term catalyst for the technology platform is really the game changer for SoFi. And so the fact that they're reinvesting every single dollar back into the platform is hugely beneficial. It's a very small short-term sacrifice that the business is making, continually reinvesting in the growth of the technology platform, but the actual upside in terms of the ROI over the long term is massively overweighing that. So I'm very happy with the technology platform being where it is, especially because it's profitable. And really, I'm not too fussed about the growth rate for that because of that long-term vision and potential that they have. So now let's jump into SoFi's fastest growing, albeit their most unprofitable segment, financial services. Financial services for SoFi is divided into a couple of core products, the largest being SoFi Money and SoFi Invest, followed by Relay. From a product perspective, financial services on aggregate grew 2.7 million, up 83% year over year to 5.9 million total products as of this latest quarter. From an aggregate numbers perspective, the majority of this 2.7 million increase in financial services products was concentrated in SoFi Money and SoFi Invest, both of which grew almost a million products each year over year, up 72% and 68% respectively for the year. In the third quarter alone, SoFi Money added nearly 166,000 new products, SoFi Invest increased by 106,000, and Relay added nearly 256,000 new products. However, all financial services products are growing very quickly. The laggard in the group is Invest, growing 68%, and that is the smallest percentage growth in financial services. A lot of them are growing triple digits, which is absolutely fantastic to see. Now, SoFi Money, I want to dive a little bit deeper into because this also includes checking and savings. And 2022 has overall been a fantastic year for SoFi Money. After securing the bank charter back in January, SoFi introduced checking and savings. The program today has a 2.5% APY for checking, and just last week, a couple of days ago, they released a 3% APY for savings account, which makes it one of the most competitive offerings in the market for a zero minimum balance requirement account. Digging a little bit deeper, this was the insight that I found the most interesting. Quote, total deposits grew 86% during the quarter to $5 billion at quarter end, and 85% of SoFi Money deposits, so this includes checking, savings, and money cash management accounts, are direct deposit members. 50% of newly funded SoFi Money accounts are setting up direct deposit by day 30. This is up from 37% in the second quarter, and this has had a significant impact on debit spending. And look, all of this is very positive, not only on the SoFi brand, but also on the increased growth in terms of financial services, and more importantly, the acceleration in that cross-selling flywheel. All of this contributed to the financial services segment increasing net revenue by 288% in the third quarter 2022 to $49 million from $12.6 million a year ago. However, as I mentioned before, despite this huge increase in total net revenue, this segment is unprofitable. The contribution loss for financial services was $52.6 million in Q3, up 33% from the $39 million loss they reported in Q3 of 2021. The report stated that a huge reason for this was the credit card business. And much of this is to be expected as the business continues to further scale. But at this crazy rate of growth that SoFi is experiencing, I wouldn't be surprised if financial services also turns profitable within the next 2 years, considering that flywheel that we've talked about at length. Now, despite a lot of these numbers being really fantastic for the business, I think what really drove the stock higher today was the increase in guidance which they had, which represents the third straight quarter where they've increased their guidance, despite the student loan moratorium weighing on the business all throughout 2022. In their report, they highlighted that management now expects full year 2022 adjusted net revenue of $1.51 to $1.52 billion, up from $1.5 to $1.51 billion previously, and the full year adjusted EBITDA of $115 to $120 million, up from $104 to $109 million previously. Now, obviously, when student loans comes back in 2023, from an adjusted EBITDA perspective, I think the company is pretty much guaranteed to continue raising this guidance. And even anecdotally speaking, we know SoFi to be this business that sets the bar for analysts fairly low and consistently delivers above and beyond expectations. The business has beat on revenue, on EPS, and raised guidance now for several quarters in a row. But safe to say that these numbers, as bullish as they may seem today, are even more bullish for the SoFi investors who have actually been following all of the news catalysts, and they know just what's around the corner for this business from a growth perspective. Now, just keeping with the financials for a second, I'll address the net loss very quickly in this quarter, since this is perhaps the main objection that I get consistently with people not wanting to invest in SoFi. From a trailing 12-month perspective, SoFi's revenue is about $1.37 billion, and their adjusted EBITDA is about $78 million. And we know from guidance that they expect to close out the year with over $1.5 billion and $117 million adjusted EBITDA. But they did also lose. However, if you dive one level deeper and you look at the trend, this quarter they lost $74 million. However, last quarter they lost $95 million, and the quarter before that they lost $110 million. And so if you look at that trend more closely, they're inching towards that profitability slowly. And so just following this trend, I think next quarter we can expect a loss under $70 million for the quarter. And if the business continues to execute in 2023, with student loans also coming back, I think that's going to have a huge boost, and we could even see profitability as early as late 2023. I think that's not unrealistic to say. So to wrap this video up, I know that was a lot of information, but overall this was a fantastic earnings for the business. They beat on both top, bottom, and raised guidance as well. And one of the factors I think that concerned me the most is that deceleration in their members' total products and their financial services products growth. However, I am chalking it up right now to, number one, the business maturing more, therefore obviously they're going to grow slower, and number two, 2022 in general has been a really rough year on a macro perspective. And so I'm not too concerned about that. However, that's a number that I'm keeping a close eye on. The execution in this business is still top class. Anthony Noto said in his Bloomberg interview that 2023 is bound to be a fantastic year for the business. SoFi continues to be my second largest position behind Tesla, and I am happily adding if the market continues to sell off the stock, as we saw the stock price fade from 20% gains to 5% gains today. I'm continuing to add, especially with this execution. For more SoFi news, analysis, and commentary, please make sure to subscribe to this channel for future videos. If you enjoyed this video, please make sure to share this out with someone who you might think might enjoy it. For right now, this is the Fundamentals of Investing podcast. Thank you so much for listening.